The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. Happy Friday the 13th. I'm Tommy O'Brien coming to you live from TFNN just after 9 a.m. Eastern Time as we come into Friday trading and we come into earnings season with the banks, folks. And we got markets kicking things off negative by 1% as we kick off earnings season. So much for 4,000 on the S&Ps. You're trading at 39.62, basically coming right into the lows of yesterday. You saw the volatility yesterday, man. Quite the volatile day on the CPI numbers. They basically come in line yesterday. The market finishes higher above 4,000. We kick things off this morning. Watch out, folks. Banks setting aside some money for recession potentially coming down the line this year. NASDAQ 100, you're off a pretty similar 1.1%. You see the NASDAQ compared to the S&Ps, right? S&Ps right back at the lows we saw yesterday. NASDAQ 100, about 100 points above that price level right now. You get the Dow off about 0.9%. You got Russell off about 0.9%. So all the indices pretty close in line as we kick off earnings season. How about Bitcoin, man? Right? How about Bitcoin? The last 2 days from 17.2 up to 19,000. If you were holding Bitcoin before the FTX implosion, you've almost lost no money, which I find very, very difficult to comprehend. Nonetheless, crude up 35 pennies at 78.74 this morning. You got gold up above 1,900. We were just above 1912 overnight. You're down to 18.98. We're up $5 on the session technically for gold. We jumped to notes and bonds. A little bit of volatility. You make it all the way up to 115.15 on the 10-year. Right now, we're technically negative by 3 ticks on the 10-year at 115.04 right now. And you jump over, that's talking about a yield under 3.5% the 10-year right now, 3.46% yield on the 10-year. I wonder what Chairman Powell's thinking about how yields and dollar index, so forth, is trading so far this week. Because it's almost like they're calling the bluff of the chairman, saying, guess what, man? No way you guys are holding out for higher rates for all year. But guess we're going to see what happens, man. The dollar with a 102 handle, you make it as low this morning as 101.98. So we got a 101 handle on the dollar, down from 114, down from a price point of 113 November 3rd. It's been a one-way trip, man. Pretty remarkable when you look at it. We are back to prices in April of last year, folks, on the dollar index. You jump over to the volatility index, talking to some friends yesterday, 1866 overnight. We finished yesterday's trading with an 18 handle. You check out this thing on a daily, folks. You look at just the last year, right? What's this year going to be like versus 2022? Because, boy, if it's the same thing, then watch out from where we're at, folks, because anytime you've seen the VIX get down to this level, we've seen spikes in pretty dramatic fashion. Anytime you've seen the VIX get down to these levels, that has correlated to a pretty decent market peak. Now, doesn't mean that's going to be the same for this year versus last year. A lot more influences going on last year. Fed on a hiking cycle to combat generational inflation that we haven't seen in some time. This year, the market digesting those rate hikes and trying to figure out, will it squash inflation? And if it does, what is going to be the impact on the economy? We kick things off with the banks, but before we do, we're going to talk a little bit of Delta Airlines as they're out with their numbers as well. Delta trading lower, decent numbers, man, on Delta, okay? I had a friend joking around about rational markets this morning because, boy, they had some pretty decent numbers. Higher labor costs, a dent in the profit forecast, okay? That is the negative there. And guess what? That's everything, folks, right? Higher costs, hurting margins. That's been the theme for some time now across the board. Airlines, they're getting hit as well. And getting into the numbers, though, man, earnings per share, they beat by 15 pennies, 148 versus 143. Adjusted revenue, 12.29 versus 12.23. Total sales, 13.44 billion, higher costs ate away at some of those profits, though. Net income still $828 million. Operating costs rose 19% in the fourth quarter from 2019. I especially like when you're comping things out versus pre-COVID. You just had so much variance when you came into COVID, including, what's it including? $2.8 billion fuel bill, up 42% from 2019, folks. And if you look at it, right, net income is $828 million. So what does that have to be? What was that number then? That number was probably, fuel costs were probably about $2 billion in 2019, because a 42% increase off of $2 billion would bring you pretty close to $2.8 billion. That's why math's important, folks, being able to do those numbers, especially if you're in the market. So what does that mean? I mean, it's pretty remarkable, right? What did they make? Their net income was $828 million. Well, they would have doubled that if they weren't paying extra for fuel. Just shows you how much that fuel impact is having on the airlines. Yeah, but their forecast was decent, man. It was a pretty decent quarter. I'll pull up some of the greater numbers. I had a full breakdown. Let me see if I can find it real quick, as my friends and I were discussing, because I think they were even the first ones to come out ahead of the banks. But let me pull up their numbers. Nah, it'll take me a second to pull them up. Well, what I will say, which I didn't cover there, is that they still see 2023 adjusted earnings per share of $5 to $6. Market was expecting $5.10. Decent numbers there. And they still see 2023 adjusted total revenue up 15 to 20% year over year. So add those into things. Pretty decent numbers, man. But guess what? The market wanted more. Delta, they're going to trade down. What are you trading down, man? What, $2.30 on a $39 stock on the open? So we'll see how they trade. All right. I got the flexible grid ready. I got the 4 charts ready. Here are your 4 banks, folks, that just came out with their numbers this morning. We'll go over the numbers in a moment, but take a look at the charts. Is Citi negative? Citi's negative by a few pennies. I was going to say they're all negative. They were all negative, all right? And zooming in on Citi, you can see kind of the action. You were negative. You've climbed back to flat. But, boy, all the banks trading lower. You got JP Morgan down to about 136 from 139.49. You got Bank of America down to a 33 handle from 34.47. You got Wells Fargo down about $1.50 from 42.83. And you have Citi basically flat with the bid right at where it closed yesterday. Now, let's jump through some of the banks as we come into this, okay? Citi, we'll pull up the headline. Fourth quarter profit declines by 21%. And how much money did they set aside? That's what I'm going to try and jump through real quick as we come into this first break, folks, and then we'll go back to what they did. Provisions for credit losses. Okay, this is Citi. $1.85 billion. Market was looking for about $1.79 billion. Wells Fargo, they set aside $957 million for credit losses, and all of these banks reduced this a year ago, right? After reducing it $452 billion. Is that right? $452 billion? Come on, CNBC. Pretty sure that's supposed to be $1 million, right? If Wells Fargo had $452 billion of provisions a year ago, well, then it's been quite a year, nonetheless. Bank of America. And you look at the numbers, all right? We'll get into the numbers again because we got so much to cover this morning with the earnings season kicking things off. 85 versus 77, 24.66 in terms of $24.66 billion in revenue for Bank of America versus 24.33. They're down about 3%. Net interest income, just mammoth numbers across the board. But how much did they put aside? $1.1 billion provision for credit losses. That's up $1.6 billion compared with the same quarter in 2021. And net charge-offs remain below pre-pandemic levels. But the market? Well, no, they're talking about, and then we get into JP Morgan as we come into it. JP Morgan, $2.3 billion provision for credit losses. Now, that's quite a number, okay? But you talk about numbers, man. We'll pull up JP Morgan. We'll pull up Bank of America. The amount of money they are making off net interest income, folks. Yeah, there it is, $20.3 billion. Topped estimates by $1 billion. But guess what? All the banks trading lower. S&P is negative by 1%. We got a lot to talk about. Don't go anywhere, folks. We'll be right back. Stay tuned. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&Ps down about 40 points right where we kicked off the show. We're trading at 39.63, and you see the slow slide, man. It began about 5:30 in the morning. We're trading up there at 4,004, just above the 4,000 price point, ticking around. And yeah, it was a pretty slow, quick slide from 4,000. You get some earnings numbers coming that accelerate things at about 7 in the morning, and from there we've been chopping around right where we are since about 8 a.m. Eastern time. Going to be an interesting open, digesting everything going on, man. Recession. Going to be one of the biggest themes in terms of this earnings season and where we look to go forward and how those stocks potentially recalibrate the earnings per share multiples that we're dealing with if you see some revisions on those earnings potentially. Okay, jumping back to the chart, we'll jump through some of those numbers as we kind of skim through them first on that quick coverage at the top of the program. So all the banks almost beat top and bottom line, I think. All right. JP Morgan, we'll kick it off. $357 a share. Market was looking for $307. Revenue, they beat by $1.27 billion in a 90-day period, folks, right? Huge numbers. Profit jumped 6% from a year earlier to $11.01 billion in 90 days, man. Revenue rising 17%. Interest income, $20.3 billion, topping the estimate by $1 billion. Average loans rose 6%, but the bank posted that $2.3 billion provision for credit losses. That is JP Morgan. That's the biggest one out there. It makes sense. They're probably the biggest bank out there, so they got the potential losses that are the largest as well. That's a 49% increase from the third quarter, and it exceeded what the market was looking for, which is $1.96 billion. Folks, that's $304 million extra that they put aside, even more than the market was looking for potential credit losses, okay? The move was driven by a, quote, modest deterioration in the firm's macroeconomic outlook, now reflecting a mild recession in the central case. It's an important one, all right? As well as loan growth from customers using their Chase credit cards, the bank said. The recession, in which U.S. unemployment could reach 4.9%, folks. We're at 3.5%. I know that 4.9 is still an amazing number for an unemployment level across the country. That is a lot of people that will lose their jobs, though. It will have an impact, man, and we are not feeling anything like that right now with unemployment dropping on the last non-farm payroll number. So the recession is expected by JP Morgan economists to hit in the fourth quarter of this year. That was the CFO talking to reporters Friday in the media call this morning. And yeah, that jump in credit provisions topped Bank of America and Wells Fargo, which saw smaller increases. JP Morgan said Friday the U.S. economy currently remains strong thanks to well-financed consumers and businesses, but he pointed to a series of risks to that outlook. It's important to see what JP Morgan's saying. Why not, right? We still do not know the ultimate effect of the headwinds coming from geopolitical tensions, including the war in Ukraine. That almost gets overlooked in the market these days. The vulnerable state of energy and food supplies. That doesn't get overlooked. It's talked about. Persistent inflation, the number one talking point for the last 12 months probably, that is eroding purchasing power and has pushed interest rates higher, and the unprecedented quantitative tightening. So what he's saying is we don't know the ultimate effect of the headwinds coming from many things, one of which are the unprecedented quantitative tightening. Now, we got a Fed meeting at the end of this month. We got another one March 22nd. I'd imagine the March 22nd meeting, folks, is going to be particularly important in terms of how much data we're going to get in between now and then, okay? Because we're going to get January numbers by then. We're going to get February numbers by then, right? We're going to have 2 full months of data. If you're talking about what we get before the February meeting, we've gotten a lot of the important numbers, man. We have non-farm payrolls for last month. We have CPI. Those might be the most important right now with what the Fed is facing. PCE is an important one as well. But nonetheless, we go from there. That's JP Morgan. Now, Bank of America, right? They beat earnings, 85 versus 77. They beat by $330 million in 90 days, $24.66 billion versus $24.33. Expectations were running high that they would post gains in the interest income thanks to higher rates. $14.7 billion in net interest income. Expectation, 14.8 though. They didn't even get to the net interest income level the market was looking for. And yeah, they put aside investment banking fees falling more than 50% to still $1.1 billion. Not bad to make $1.1 billion in investment banking in the last 90 days when you think about basically that market almost drying up. Not completely, but you get the point. Yeah, Bank of America was supposed to be one of the main beneficiaries of the Fed hiking rates, but the bank got hammered last year amid concerns that a recession was on the way. I mean, the banks were one of the more interesting ones, man. Now, we jump around to some of the charts. We just talked about JP Morgan. All right, they're going to trade down, and market's even dropping from where we were. But taking a look at where we were in the last year, boy, do you remember coming into last year? This is where things just amazing. We come into last year with JP Morgan pushing 160 to 170. The Fed goes on a hiking cycle like we've never seen before in my time. And banks get hammered. You know, don't think you're smarter than the market ever, folks. Diversify yourself because no one's smarter than the market, and you can never be certain of what's going to happen in the future. You know, you make your bets, you make your wagers, you make your investments, and you keep yourself diversified. That's your best shot because, man, there's been so many times that this market has surprised us, to say the least. Average loans and leases for the whole bank rose 10% year over year. The same metric for consumer banking rose 6%. And yeah, they're going to trade lower on the open. We get to Wells Fargo. The bank set aside $957 million for credit losses. The numbers, yeah, 67 cents a share. No, don't tell me a year ago. Tell me what the market was looking for. Well, they miss on the revenue side, as in the market was looking for almost $20 billion. They come in at 19.66. Net income tumbling to $2.86 billion. Big decrease driven in part by lower mortgage banking on fewer originations. Mortgages, right? Yeah, who's getting a mortgage right now? Not many people compared to where we were a year or two ago. Yeah, they missed in a decent amount. Wells Fargo, after excluding severance costs and tax gain, they earned 61 cents. The market was looking for 66. And they had a tough year last year. Wells Fargo, we check out their numbers with less than 5 minutes to go to the opening bell. Sitting at about $42. You take a look at this chart going back to the lows of 2020. When this thing was at $20, you run up to 60. You almost make it back to that 618, man. That pullback that we had in June of last year got us to a low of 36.54, basically within $1 of that price point. Not bad. You're sitting at $42, but we're going to open at about 41.26 this morning. And Citi we'll round it out with. So here's a nice breakdown of the numbers. Net income down about $700 million versus last year. Earnings per share $1.10. And they always add this. It's not clear. There's so many things that go into these accounting numbers in terms of how they can finesse, to put it lightly. The estimate was 114. Okay, revenue, 18.01. Market was looking for 17.9. Net interest income, it's just amazing how much they make in 90 days. $13.27 billion. Market was looking for 12.7. So compare them, right? Some of the companies weren't even making what they thought, some of the banks, for net interest income. You have Citi beaten by almost 600 million, man. And percentage-wise, it's a huge number. Trading revenue, fixed income, 3.16 billion, above expectations. Equities, 789 million. Yeah, fixed income, man. We've seen some action there. And provisions for credit losses, 1.85 billion for Citi. They post that number. Net income slumping to 2.5 billion, as I said. That's down 21% versus a year ago. They set aside the $1.85 billion, and we take a look at Citi as we get ready for the opening bell, folks. Citi shares, yeah, down barely. They're the only bank that might be pushing positive territory for some decent numbers on the open. Stay tuned, folks. Delta, down about $2 as well. We'll be right back for the opening bell.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have markets open. You're looking at an S&P down 32 points right now. We jump around to the equities, moving on their numbers. Delta, we'll kick it off with down 7.5% on the open, trading at 36.65. We jump around to the banks, kick it off with JP Morgan, down 3% this morning, 135.33. We jump over to Citi. Citi, the strongest of them all, probably still off 1% this morning. Wells Fargo off 3.3%. Bank of America, look at that. Bank of America catches a little bit of a bid on the open. They're down 1% as well. So you got Bank of America and Citi down about 1%. Wells Fargo, JP Morgan down about 3%. Delta off more than 7%. Let's see how some of the other airlines are trading. Yeah, on that Delta news. American off 3.2% so far this morning. We jump over to United Airlines off 1.3%. They catch a little bit of a bid on the open. Let's look at domestically. Southwest off about 2% this morning, and JetBlue off about 3%. Let's take a look at JetBlue, man. This stock has just looked horrid, to put it lightly. And maybe that's your spot, man. You know, folks, sometimes it's not that difficult. Sometimes you don't have to be a genius technician to know where you might have support. And maybe you have support at the COVID lows, man. You got a double bottom there. We've now bounced from 618 to 788. You're still down 3%, man, for their numbers. Let's see when JetBlue comes out with their numbers, man. You jump over to the earnings tab. January 24th. You're talking about a week from Tuesday. They'll be out with their numbers, JetBlue. Let's see some of the other airlines when they're out with their numbers as Delta kicks things off. And Delta, probably one of the leaders. American will be out January 19th. United Airlines out January 17th. These are next week. What do we say? Southwest, January 26th. So a week from yesterday. Yeah. So they're spread out over the next couple weeks. Let's take a look. Goldman Sachs. So along with the banks, now Goldman, they're off 1.5%. They're making some headlines as well this morning. You jump over to Goldman, though. I'm going to put this thing on a short-term time frame chart. They're a little bit lower with the banks. Jump over to the Analyze tab. They're out with their numbers, I believe, Tuesday? Yeah, Tuesday. Goldman will be out with their numbers. I think Morgan Stanley's the same day. Yeah, Morgan Stanley will be out with their numbers as well. Goldman, Morgan getting dragged down with the market and the banks, both off about 2% this morning. The article from Goldman this morning, so I woke up checking out all the news early this morning. I'm seeing the Goldman article. This is out at 6:10 this morning. The disclosures talking about a $1.2 billion loss in just 9 months in their newest unit. Now, they have not published their numbers. They haven't announced their earnings yet this quarter, folks. That's Tuesday. So this is kind of a preemptive announcement. 3 months after they carved out a new division to house what's left of its once ambitious foray into Main Street, giving its shareholders a clearer look at those financials. And those financials racked up more than $1.2 billion in pre-tax losses in last year. The first 9 months with the drop accelerating every quarter. Yeah, and this is, as they say, it shines new light on how much the expansion has been dragging down their bottom line, man. From the start of 2020 through the end of September, Platform Solutions pre-tax losses piled up to $3 billion. Yeah, they're talking about charge-offs. So the division is a whittled-down version of what was once Goldman's lofty goal of storming the consumer market, building a digital bank of the future that would become an industry leader. Instead, that didn't work out. Rattled by the persistent cost, difficulty setting up new business, the firm decided to scale it back and reposition the pieces, and much of what's left, the mass market is now in that Platform Solutions group. So Goldman, it seems like they're compartmentalizing the business that's struggling there. And yeah, they got a pre-tax loss of $1 billion in 2021, mostly tied to the Apple Card. So they were trying to get into there. And $2 billion in 2022 mainly stems from the Apple Card and installment lending platform GreenSky. The people said, what's going on with the Apple Card, man? How'd they blow that one? Initially, it was supposed to break even by the end of last year. Not happening, man. They now forecast it may achieve that sometime in 2025. Folks, be careful of estimates that go that far out in the future when you're talking about profits. They were supposed to be profitable last year. And yeah, it's not a big number, but it does break down how they've kind of just been branching out to businesses, and now they're grouping it all together. And when they say that they'll be profitable by 2.5 years from right now, just be skeptical of those numbers. And yeah, agreed. Compared to the numbers that we just went over, and to take a look at the numbers for some context, which is important, the numbers that we just went over. Revenue in 90 days, $35 billion, and profit for the quarter, $11 billion. So losing $1 billion in the year, not the end of the world, but it's not nothing either, folks. And it's going up, which is the aspect that they're focusing on there. But not surprising that you have all those banks trading lower, and you got Goldman, and you have Morgan Stanley trading lower as well. All right, jumping around some messages in the Tigers Den. Folks, if you haven't joined the Tigers Den, man, I don't talk about it enough because I hope that everybody that's out there listening has already joined. It's $1 for the year, just basically to verify your identity so we don't have spammers in there consistently. Check it out, man. There's great conversation happening from the moment you wake up, folks. That's how I look at it, and I'm up pretty early. There's action there. There's action at night. There's action on the weekends now as well, so check out the Tigers Den. Okay, let's go over to what else we have going on. Let's see. What else do I have pulled up there? Could talk about a lot of things. Yeah, Bill Huang. Tesla. Let's talk a little bit of Tesla. Okay. Excuse me as I jump around here. Here we go. Tesla slashes prices up to 20% in a broad bid to boost sales. Model Y in the U.S. drops to 13,000. Model S drops by 13,000. The Model S Plaid falls by 21,000. Now, they had initially reduced prices in China, and it was just a leading aspect of what they're doing, man. And it is huge numbers, right? 20% cut in prices. You talk about what they're dealing with in demand, folks. And I was trying to find the article. I saw it recently, and I think it might have even been an opinion piece on Bloomberg. I forget what it was exactly, but they had a quote. And they had a quote with one of the investors in the company. I believe he was asking a question of Elon. And this is what to consider on this one, folks, because I thought it was a great point. He said, "My grandkids don't think it's cool to own a Tesla anymore. That's a big problem. And what are you doing about it?" Okay? Yeah, and how would you feel if you bought a Tesla last month, man? I wonder what happens there, right? For those people that just signed a deal like 2 days ago, talk about buyer's remorse, man. But keep your eye on that one, man, because I think it's an important one. And I think the brand going forward has taken a severe hit. Separate your politics from all of it, folks, okay? They're electric vehicles, and I think everybody across the board likes electric vehicles, okay? But it's not the same or as cool the way Elon, and it's his right, man, okay? It's his right to do it. Doesn't mean he might be leading the company. But it's had an impact, and I think that question that my grandkids don't think it's cool to drive a Tesla anymore, okay, is an aspect where the brand has taken a hit that is going to be very difficult to repair anytime soon, and pay attention to the economics and the data that's lining up with that as well. Because I don't think many people a year or two ago would have considered that Tesla would have to be slashing their prices by 20% to start pushing out vehicles. That is not a strong demand market when you just have to cut price to eventually find out where supply will equal demand, even if it cuts apply to just a portion of the year. Yeah, earnings could end up 30 to 40% below the current consensus. Might be wiping out a bunch of their margins. Stay tuned, folks. Lots to talk about still. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&P right now, negative by about 34 points. Had a little bit of a spike there for a few minutes, up to 39.75. We're back to 39.69 right now. NASDAQ off 109. Let's check in on those banks real quick, see how we're trading on the open. Bank of America down by 2%. JP Morgan down by 1.5. Citi off 1.7. Wells Fargo off 4.5. We jump over to Delta off about 6.7. We jumped to Tesla shares this morning, down 6%, folks, 5.9%. Jumping back to that article real quick, taking a look at the actual price decreases. I'm going to pull a quote out of here before we wrap this up. So here are the new price, the old price, the percentage decrease. Boy, you got some decent numbers there, man. Model 3 performance, 53.9 from 62.9, right? Percentage-wise, 15%. The Model Y from almost 66 to 53,000, a drop of 20. The Model Y performance, almost a drop of 20 as well. You get into some of the SUVs, Model S Plaid. Yeah, big numbers, man. 10%, 15%, 9%, and 14%. What is interesting here is that these decreases, okay, get some of the vehicles now under the cap that awards them the $7,500 electric vehicle tax. So the changes in the U.S. drop in price of the Model 3 sedans and certain Model Y below the caps they needed to come under to qualify for as much as $7,500 electric vehicle tax credit. Excuse me. Now, late last year, the IRS released guidelines. They irritated Elon, of course, because the Model Y didn't weigh enough to be deemed an SUV. That meant the 5-seat version of the vehicle was subject to $55,000 price cap that applies to sedans versus the $80,000 that applies to SUVs. That's the Model Y. And he's saying that's an SUV. Everything's a hybrid these days, right? So it's a tough one. Tesla now notes on its website that the $7,500 tax credit that certain customers are now eligible for will apply to vehicles it delivers through March. Now, much of that law went into effect January 1st, and the Treasury Department is still finalizing battery content sourcing requirements that could cut the tax credit, okay? But Elon's not worrying about that. And let me get into one of the quotes. Where did I have it? Yeah, here we go. Okay. This is a Bernstein analyst, okay, with an equivalent sell rating on Tesla. He's an analyst with a sell rating. He's biased, okay, but that's been a correct rating recently. Wrote last week, okay, that the car maker was facing a significant demand problem and that its challenges would persist in part because its models were too expensive to qualify for those tax credits, okay? This is what Tony Sacconaghi, maybe? We believe Tesla, now this is last week, we believe Tesla will need to either reduce its growth targets and run its factories below capacity because they don't have the demand where they are right now, or sustain and potentially increase recent price cuts globally, pressuring margins. That's now what's happened, okay? That was in a January 2nd report. Analysts gave two options, and he was right. They took the second option. They cut the prices. They see a demand problem remaining until Tesla is able to introduce a lower-priced offering in volume, which may only be in 2025. That's the part I wanted to get to, man. Are you going to wait in Tesla shares for 2025 till they have a low-priced vehicle in volume? God bless you, folks, if that's what you're going to do. Yeah, but nonetheless, that's a real impact. But, man, you know, hinge on the fact of what I said before, folks, because the cool factor, and it does matter, that especially if you go to one side of the political spectrum, man, he's alienated a lot of people who are really into electric vehicles. And he's alienated young people who are really into electric vehicles. And the brand's taken a hit because it's now tied to Elon. And whatever you think of Elon, he is a divisive character at times. And there we go from there. Now, why is Elon a divisive character at times? Well, we're going to jump to the next one, man. Why not? We'll stay on Elon. The Saudi wealth fund chief refuses to testify at Musk's Tesla fraud trial. Can you believe that? That the Saudi wealth fund chief is not going to come over here and testify at Elon's trial to back him up for his claims that he's getting in trouble for that he was making? As if, folks, he is going to be Elon's dog running over here to defend him in court, okay? So it comes down, Elon's not going to be able to help count on the head of the Saudi Arabia Sovereign Wealth Fund. Now, this ties back to him saying, this is from a trial over the 2018 statements where he said, taking Tesla private, funding secured. The funding secured one, man, really got him in trouble, okay? And what it gets into is he's saying that they had a handshake deal, okay? They've played a prominent role in this lawsuit, the Saudi Arabia Fund. Text messages between that chief and Musk revealed in April showed that Musk was upset because he believed he'd reached a handshake agreement with that fund governor weeks earlier in July of 2018 to fund the transaction. This took place after the tweet, so he's doing damage control here, okay? Also revealed tension in the relationship. Al Ramayan tells Musk that the fund can't make a commitment that we don't have sufficient information on, adding that he's been waiting for additional details. I don't think I've ever said this one in a sentence, folks, but on this one, I trust the Saudi wealth fund manager versus the other party, because I do. Because I don't believe Elon that everything was right out. You don't make a deal like that, folks, and secure funding for a company like that. And I'm sure they wanted more details. I'm sure it was a general statement that they were interested, that maybe that price would work. Let's work out the details. That's not the way you do it, though, man. So nonetheless, you think he's going to come testify at Elon's trial and kind of back up Elon's claims? There is no good getting tied to Elon right now, folks, and he knows that as well. You think they need that baggage? They're on damage control. The Saudis. They're out there buying, the PGA, buying the WWE, and buying Ronaldo to kind of whitewash themselves. They're not going to tie themselves to Elon as he tries to pretend like he wasn't defrauding investors. Folks, I remember when that happened, man. I remember when that happened, and it was almost like a free roll. Now, where do we got to go back? Let's go back. We're not going to be able to even find this. When it's so tiny, the moves that were going on. Yeah, we got to go back. I mean, the moves that Tesla's had since then, many splits adjusted, took place. Let me see if I can find it. I think it was April of 2018. Let's see. July of 2018. So it was around then. Where are we talking about here? Yeah, somewhere in here. Well, yeah, there's some big spikes in there. There's some big pullbacks. The point being, if you had funding secured at 420, it influences traders, folks. And I remember at the time talking about you can do whatever you want with a private company. But the whole point of public markets is when you go to the public markets for capital, okay, you make an agreement that you are going to provide an equal playing field for all investors, okay? So you can't be the CEO telling the public that you've secured funding to take the company private. People then trade off that number, which is at best a grandiose exaggeration, and I'm being kind, okay? Somebody in that role should not be able to do that. He's still dealing with it. So when you think about why he's taking the flack, folks, why that brand has taken a hit, you can only do that kind of stuff for so long while the stock's going through the moon, man. When the stock starts dropping, you gotta explain all those actions, to put it lightly. All right, we're going to come back, folks. We're not going to talk about Elon or Tesla. We're going to talk about the markets. We'll talk about some of the companies with earnings coming up. We got the S&Ps catching a bid on the open, only down by 23 points. NASDAQ 100 off by 73. Stay tuned, folks. One more segment. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no cash or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. How about that gold acceleration, man? Back to a 15, 30-minute chart even. We got gold up to 1916. We're trading at 1913. I'm going to put it back real quick. On a Tesla, 1913 from 1618, man. Where are we, though? We're right at the 618 of the full acceleration lower, folks. It'll be interesting to see. You're going to bump into potentially a little bit of resistance, which was support from an area of March 2022 until about April. You chop around at that price level. You're right at the 618. It's been almost a one-way trip, man, from 1618 on that gold contract. We take a look at the dollar index, DXY, 102.31. You take a look at the yen, dollar yen this morning, backing off again. Expectations that Japan may jump in, I guess. Where was I reading that? I was reading it somewhere, man, this morning. That Japan, they may be gearing up to step in yet again. Quite a fall off on the yen, and that is going to impact the gold price. And you're seeing it happen, folks, with the dollar yen. Yeah, down 1.2% to 127. And remarkable. That gets us back to April 19th prices in the dollar yen. All right, what else do we have going on next week as we come into earnings? So, one of the biggest names out there, it's going to be Netflix with their numbers. You're up 1.6% for Netflix. This thing, quite a demise to 162. You've risen, though. It's at $170 off the lows. The 382 would put you at about 373. Netflix is out with their numbers on Thursday, the 19th, and you are looking for, that'll reset next week in terms of how big of a move, but there you see it. Implied volatility, a $38 move in either direction for next Friday's options if you want the whole week. Yeah, that's a solid, 11, 12% for their numbers. What else do we get? I mentioned we get Goldman Sachs and Morgan Stanley on Tuesday. We get some of the brokers. We get Charles Schwab on Wednesday. We get Interactive Brokers on Tuesday. We get United Airlines on Tuesday as well. So we get some of the banks. We get a couple more of the airlines. We get some of the brokers. You get Alcoa on Wednesday with their numbers as well. And then we get Netflix kicking things off. And the week after that, folks, you're coming into some tech earnings. Procter & Gamble next Thursday as well. Folks, thanks so much for starting your Friday off with me. Stay tuned. Basil Chapman up next for the Tiger Technicians Hour. Live programming all day, folks. Have a great Friday. Have a great weekend. We'll see you back here Monday morning. Thanks so much, folks. Have a great one.